Welcome to The Explainer. You ever wonder what separates a winning stock from, well, a dud? It's not just luck, There's a real process behind it. And today, we're going to peek inside a professional analyst playbook to see exactly how they do it, how they break down and value a company using a real-world example.
I mean, that's the question, isn't it? Well, lucky for us, analysts at Web Cornucopia Finance just put out this incredible deep dive on one of India's biggest financial players, Bajaj Finserv, and they're trying to answer that exact question. So, let's unpack their methodology, see how they think, and what they ultimately found.
Okay, so first things first, any good analysis has to start with the big picture, right? Before you even look at the company itself, you've got to understand the world it lives in, the economic environment it's operating in. You could call it the playing field.
So our case study, Bajaj Finserv, is what's called an NBFC. Now, what does that mean? Basically, think of them like specialized lenders. They provide financial services, but they aren't technically banks. And these guys are absolutely vital. They're like the engines driving credit and growth throughout India's booming economy. And the report points out some really powerful tailwinds pushing this whole sector forward. You've got this rising middle class with more money to spend, and at the same time, there's this huge digital transformation happening. The analysts specifically call out something called the JAM Trinity. It's pretty cool, actually. It stands for Jan Dhan bank accounts, Aadhaar biometric IDs, and mobile phones. This trio has basically connected hundreds of millions of people to the financial system for the very first time. A total game changer.
But, it's not all smooth sailing. Every opportunity has risks, and the report is really clear about that. The analysts are keeping a super close eye on things like rising interest rates, because that can squeeze everyone's margins, and also the constant threat from new, quick-moving fintech companies looking to shake things up. Okay, so the market's hot, we get it, but who are we actually talking about here? Let's zoom in on the star of this report, Bajaj Finserv. Now, the first thing you need to get about Bajaj Finserv is that it's not just one business. It's really more of a financial powerhouse. Think of it like a giant umbrella company, and underneath it, you have all these major players in lending, in insurance, and in wealth management. And that structure? That's kind of their superpower. Yeah, lending is the biggest piece of the pie, but look at this. Almost half their income comes from more stable businesses like insurance. The report really hammers this home. This diversification is what protects them from risk and gives them this incredibly solid foundation to grow from. All right, let's get to the core of the analysis. This is where we pop the hood and look at the engine. Think of it like a full financial health checkup, where the analysts use a few key vital signs to see how the company's really doing. Okay, first vital sign, return on equity, or ROE. All this tells you is how good the company is at making a profit from the money its shareholders have put in. And their number, 19.2%. The report actually calls this best in class. That's not just good, that's the sign of a seriously efficient and profitable machine. Next up, we have to check the quality of their loans. I mean, they're a lender, right? So this metric, net NPA, basically measures the percentage of bad loans, the ones they probably won't get paid back. And their ratio is just 0.6%. That is incredibly low. It tells you their loan book is just exceptionally healthy. And this is where it gets really interesting. When you put those numbers up against their competitors, the story just pops. The report makes it clear, Bajaj Finserv is leading the pack on profitability and on the quality of their assets. And what's more, its stock valuation is pretty much right in line with everyone else. So you're getting top performance without paying a crazy premium. So, okay, the numbers look great, but the real question is, why? What makes them so good? What's their sustainable advantage? In the world of analysis, this is what they call a competitive moat. Basically, the defenses a company builds to protect its business from rivals. And the report breaks this moat down into 5 key pillars. See, it's not just one thing, it's how they all work together. You've got this trusted brand that feeds into their diversified model, and the whole thing is supercharged by their tech. It creates this powerful ecosystem that is just incredibly difficult for any competitor to come in and attack. Okay, so we've looked at the big picture market, we've checked the company's financial health, and we've understood its strategy. Now for the moment of truth. Let's see how the analyst at Web Cornucopia put all these pieces together to come up with their final verdict. And really, this one sentence from the report just sums it all up, doesn't it? It captures their entire investment thesis. They basically see this company as a top-tier, incredibly well-run business that is just perfectly positioned to ride the wave of India's long-term financial growth. And of course, they have to put a number on it. So the analysts ran 3 different scenarios. They looked at a worst case or bear case, a best case or bull case, and then their most likely scenario, the base case. And that base case values the company's shares at 1,850 rupees.
So they take all of these factors, everything we've talked about, and feed them into their own special scoring system and look at the results. The company gets excellent marks pretty much across the board, but it scores especially high on its powerful competitive position and, you guessed it, its rock-solid financial health.
So after all that number crunching, what's the final score? It's an 8.3 out of 10. And in their system, that's labeled proficient, which is basically a really strong endorsement of the company's overall quality.
So here's the bottom line, the crucial point. After all of this deep, detailed analysis, from the 30,000-foot view all the way down to the nitty-gritty financial details, the report lands on a definitive buy recommendation. And they've set a target price of 1,850 rupees over the next 3 to 5 years.
So by breaking down this professional report, I think we can all see that analyzing a company is never about just one magic number. It's really about piecing together a whole story, a story that's told through its financials, its strategy, and the world it operates in. And that kind of leaves us with one final thought to chew on. When you look at a business, what's the one thing you think matters most?